So it has been an amazing week in the stock market if you are a Facebook or an AMD shareholder, and that's largely due to the fact that both of these companies came out with amazing earnings reports and that their stock price kind of exploded off of it. You know, you can look at Advanced Micro Devices, and right now the company is at about 30% after its earnings report, and Facebook is sitting at about 12% after its earnings report. So it is kind of amazing to see that these companies of this stature kind of, moving in such amazing ways. And I'm really going to be going into in this video what was said in their earnings reports, what was kind of the big takeaways that I think you should be paying attention to, and exactly what my opinions are for these two companies after they just gave their earnings reports, and what I think about their plans for the foreseeable future. So if you guys are interested in any of that, make sure to hit that like button, hit the subscribe button, and hit that bell notification so that way you guys get updates every time I put out some content, because I'm going to be trying to review these companies as often as possible. Another thing I should point out is that in this video, by the end of it, I'm going to be looking at my channel's portfolio and giving a quick update to that and exactly, kind of what trades I've been making over the past couple of weeks. I know I haven't been making that many channel portfolio updates, and that's largely due to the fact that I don't really know if you guys want them. Not many views on my channel are focused on the videos that are just about my channel update. So now I'm just going to kind of tease them anytime I do earnings reports that affect companies that I own. And if you guys want any more direct, elongated videos on my portfolio strategies and things like that, let me know in the comment section down below and I'll be sure to do that. But without further ado, let's get into the video. So the first company I wanted to take a look at is AMD. Now, if you have been an AMD shareholder for, any long period of time right now, my hat is off to you. I know just as well as anybody that the AMD stock price is a bit of a roller coaster. And if you have had the tenacity to really hold on to your shares through thick and thin, and you've believed in the company for such a long period of time, congratulations that you have now been rewarded for, your endurance, let's say. And, also looking at what Lisa Su has done with the company, if you look at their EPS over the last quarter, their EPS on a GAAP basis was at 4 cents a share, and on a non-GAAP basis, it was at 8 cents a share. And if you look at this company, that they were losing money just over a year ago, and the fact that Lisa Su was able to kind of come in, really change how the company has been operating, really change the vision of the company, introduce more, creativity into their overall management. And now that is finally starting to pay off in a very substantial way. If you look at their revenue year over year, the revenue is up over 23%. And their revenue, while not as amazing, it has definitely not been going down by any means, and it's still growing at an extremely fast rate, especially when you look at AMD, normally being the second fiddle to Intel and NVIDIA. And so Lisa Su is a perfect example of what it means to really have a visionary CEO kind of step in and really take it by the reins and really point the company in a proper direction. So my hats are off to Lisa Su, and my hats are off to anybody that has been invested with the company ever since she started. It has been a roller coaster, but it has been a fruitful one nonetheless. So looking at some of the highlights from their last earnings report, their free cash flow was at a negative 130 million. So obviously that's not something you want to see with a company that you're invested in. You want to see a positive cash flow, so that means that the investors are actually gaining something after each quarter. But they kind of pointed out that this was due to the fact that their inventory related issues, and also with the fact that, they were timing all their new products just as, the massive slowdown in the semi space. I'm not going to say that that isn't anything that, kind of is alarming in my opinion. I think that that's something that is definitely going to be worked out over time, but that is something definitely to keep in mind. Their diluted earnings per share, on the other hand, has been exploding. They just ended this year with 32 cents a share. That's in comparison of 3 cents a share a year ago. So when you look at that, almost getting an 11x return on the EPS if you just invested in AMD during this point in time is an amazing move in the right direction, and I'm definitely going to contribute that. I'm not going to take that away from AMD, and I'm going to largely contribute that to Lisa Su's amazing direction with the company. Their net income came in with just about $340 million in comparison of being down $330 million last year, so that is an immense improvement in my opinion, and it's something you definitely need to take in consideration when you're investing in a company like AMD. Like, yes, it is high growth, yes, it's priced to a premium, but what is the actual momentum of the stock doing? And, when you look at this on a company level, the company is definitely digging itself out of its hole it's been in since about 2012, and, it's really going in the right direction in my opinion. Now, something really interesting that is kind of the main takeaway from the earnings report, in my opinion, is their revenue growth and their revenue forecast. So the revenue growth over the past couple of years has been a 25% clip, a 23% clip, and now they're expecting it to be about a 9% clip in the future. And now, that definitely means that a lot of the growth that AMD has been experiencing is not going to be kind of relevant, for the next year. However, in contrast, Intel is expected to grow revenue by only 1% this same year because of the massive semi slowdown. So when you look at it, yes, the massive, growth dip that AMD is expecting to take is, pretty substantial, and it's definitely something you need to take in consideration when you're investing in the company over the next couple of years. But when you compare it to their main competitor and their much larger competitor at that, their revenue growth is only going to be going at about a tenth of what AMD's is. And so AMD is definitely able to capitalize on markets that, Intel really hasn't been able to meet the demand in, let's say. And that's something that you definitely need to take in consideration. I do not think that, going forward, AMD is going to have explosive growth, or the stock price is going to have explosive growth from here on out. But when you compare it to its competitors, if you want to be in the semi space and you're looking for that high growth in the semi space, AMD is still going to probably be the one that beats out in terms of growth. Who knows what happens if we have a financial recession or anything like that? Both of these numbers will, probably go down drastically. And, in comparison, Intel's in a much better financial standing to really deal with a financial slowdown. But if you're not a bear or, let's say, a super skeptic on the market and you think that we're going to continue to have a couple more years of growth after 2019, it's definitely probably more beneficial to be looking at AMD as an investment than it is Intel if you're expecting that high return. And now one last thing I really wanted to point out that doesn't really have to do with AMD, but it does have to do with Intel, their main competitor. And that is the fact that Intel just announced that their interim CEO, which is currently their CFO, has now become their CEO entirely. And that is something that, as an Intel shareholder and as any other Intel shareholder will tell you, that is not what we wanted. So, the CFO came in. The CFO wasn't really a visionary. He was an accountant by trade. He's, just kind of making the company operational. He's not really pumping in innovation into the company. And the fact that they couldn't find anybody to fit that job in such a short amount of time, and they just kind of stuck him with the main role, is something that is definitely going to be a hindrance on the company over the next couple of years, in my opinion. Until that really reverts, I don't expect large innovation to be coming out of Intel, which is pretty weird because Intel is normally the really highly innovative company in the semi space. But I'm not too thrilled with the fact of management that they're going in. And if you look at company's stock price compared to their CEO and how visionary that CEO is, it can be a direct contrast to, say, their new CEO with Intel and Lisa Su with AMD. I don't expect Intel to really be executing properly over the next couple of years, and that's something that you definitely need to take in consideration when you're looking at, an investment in the CPU space. Now, jumping over to Facebook, Facebook has been executing exactly as well as I expected them to be, and it is something that, I had a relatively contrarian view when I talked about buying in Facebook, as it was going down, and I thought that the numbers that analysts were coming out with what Facebook was actually going to hit were, kind of out of the question for being realistic, in my opinion, because I thought, how are you going to, handicap a company that's had the momentum that Facebook's had as far as how quickly it's been growing and how profitable it is? How are you expecting it to go from, a 40% EPS clip over the past couple of years all the way down to a 17, just before this earnings report has, if you looked on like FinViz and you looked at what the average analyst was expecting over the next 5 years, they're expecting growth of 17%. I personally thought that was too low. And thankfully I was right, and Facebook beat their estimates by about 7%, I believe. And so their EPS for their Q4 came in at $2.38 a share, and that represented a 65% growth year over year from their fourth quarter last year. And then when you look at their EPS of $7.57 year over year for the entire year, their EPS still grew at about 40%. So that is absolutely amazing for a company the size of Facebook to be able to generate this much money for their shareholders and for the company is absolutely amazing. And it is something that makes me really happy to, kind of say that I am a Facebook shareholder. Another really interesting thing about Facebook is that their daily active users and their monthly active users were both up about 9%. And so you look at Facebook, having, this time a year ago, it had, roughly 2.2-ish billion users. Not many people thought that number could continue to grow. They thought it was just going to flatline, but they're now at 2.7 billion active users on Facebook every month. Whether it's on Facebook, Messenger, Instagram, WhatsApp, anything that's in the Facebook portfolio. 2.7 billion people, that is more than a third of the world's population. And I can only imagine, what does this mean, for the future, having 1 out of every 3 people with their eyes glued to a Facebook platform. What does that mean for Facebook's profit margin in the future? Facebook also added in roughly 15,000 jobs, and a lot of that has to do with the fact that kind of what they were doing in the whole transitioning period last year, and kind of what I thought was a good thing for the company over the long term, was that they were spending a lot of money on jobs, and they were sacrificing their margins in the meantime for, really increasing their security, their encryption, and also their privacy, because that is essentially what's going to decide if Facebook stays around or not, is how well they can kind of mask their users' data and how well they can protect that, and so that the end user feels comfortable and safe on their platform, so they don't leave their platforms and go to, say, Twitter or Snapchat. And now just looking at their mobile growth based off of that segment, their mobile revenue growth, for their ads was up 45% year over year, and that is essentially the company coming in at 93% of the company's total revenue. So essentially, mobile ad revenue is essentially what you get with Facebook, and their revenue grew 45% last year. So yes, their expenses went up, but their revenue, in my opinion, growing at another, close to 50% clip is absolutely amazing, and it means that the company is only going to continue to generate more and more money, at least in the time being. Now, the really interesting thing with how Facebook had such a great quarter and end to the year was the fact that management was largely focused not necessarily on profitability and not focused on, really growing as quickly as they had been. They were really focused on building up their security, complying with the new Europe data laws, and also getting over the privacy headwinds that, kind of coupled with the European thing, but also with the presidential election, a lot of issues with people, the data breaches, Cambridge Analytica, things like that, the possible bug that opened up, a couple, I think 100 million Facebook users to a potential scam. And that was essentially a lot of negative pressure that was pushing down the stock price. As you saw, it was in definite bear market. The stock price was down, 30 or 40% at its low from its all-time high. And so that is essentially what the company had to deal with, and that was the main focus point for management, and the company was still able to put out these amazing numbers. And in my opinion, if you look at that, okay, a company is able to put out amazing growth when it's not even focused on growth. What does it mean now when it starts to transition out of, kind of the recuperation period for, okay, really refining everything and making sure it's going to be streamlined for the future? What does that mean now when the company starts to shift its focus? And so now in this year, the company kind of pointed out, and especially on the earnings report when they were answering their questions, their main focus for this year is going to be expanding on their product line and also increasing the value in their current portfolio. So you look at that, they're going to be aggressively expanding e-commerce on Instagram, which I think is going to be the most profitable segment that they talked about in their earnings report. They're also going to be expanding their investments in AI, augmented reality, and virtual reality. Now, I think that personally for me is going to be its future growth. And I think that is something that Facebook has already strategically placed itself for, so that way even when all of their current revenue avenues kind of grow into maturity, I think that this kind of opens up in the future another avenue for Facebook to continue to grow at an alarming rate. Facebook is also focused on monetizing Messenger. Now, they have talked about that Messenger and Messenger stories are a lot more difficult to monetize than Instagram is, and that's largely due to the fact of the nature of how you use Messenger. It's largely just talking directly to the people that you want to be talking to. They've been trying to, incorporate a lot of ads and things like that onto it, but they don't want to bog it down too much that people just switch over to, SMS and things like that. So it's kind of an interesting point, and that's why I don't really give it that much importance when I think about what the management's going to be doing over the next year. I think that, yes, Messenger does have a lot of users in its base, but it is definitely going to be the hardest monetization platform, in my opinion. Facebook also pointed out that they are still going to be focusing on the major social issues, but this is largely due to the fact of what they just did over the past year. So they've actually incorporated a lot more AI into their systems to really kind of flag anything that seems fishy. That definitely needs to happen if the company plans on not hitting another year like they did in 2018. And now their biggest points from their guidance was that margins are going to continue to shrink throughout 2019, largely due to the fact that they're still spending a lot of money on security and encryption, and not to mention all the other expenses that they're doing with putting money into their investments and things like that. But they did say that by 2020, their expenses growth is going to be in line or below what their revenue growth is expected to be. I definitely think that I would rather have a company that is, one time is good when they have, a lot of money on cash. They have still $42 or $41 billion in cash. I'd rather have, when they're in this type of financial situation, them spending money on, the big expenses that they really need to have for, the next 10 years to really continue to grow the way that they want to and, kind of hold on to their user base the way that they want to. I'm totally fine with that as a Facebook owner, and I definitely think that that is the right direction. Now, jumping into my channel's portfolio, because a couple of you guys were asking about an update to all of this. So I added a couple of things, just kind of saying, when I started this portfolio here on YouTube, the start date was October 8th when I made my first position. And so I'm comparing myself now directly to the Vanguard Growth Index, because essentially I invest in mostly growth companies, or companies that I think are drastically undervalued for how fast they're growing. And so when the growth index generally outperforms the S&P over the long period of time, and that is what I'm attempting to doing, that is going to be my direct competitor when I do this. And so since I started this portfolio, my returns have now been at a positive 2.39%. I have 70% of my portfolio roughly now in equities and 30% in cash. You guys know that when I started this, I was pretty conservative on cash and I wasn't really looking to dump a lot of money into certain things. But over the past couple of months, certain bargain opportunities, in my opinion, came up. So I started to deploy more and more money into that. And when you look at me in comparison to the index that I'm directly comparing myself to, the index is down 6.25% while I'm currently positive. So overall, in comparison, I am up 8.6% in comparison to that index. So definitely this is something that, it's less than a full year right now, so who really cares about these metrics? But it's something that I kind of wanted to add into here just so that you guys can kind of track my portfolio's performance compared to an overall index that might be the, say the benchmark when you compare how well I'm performing or not. And now, so looking at my trades, honestly, I've only been buying. I only exited one position, and that was my Nintendo position, and that was largely due to the fact that when Smash Brothers came out and they did not really sell nearly as many units as they wanted to, I thought that that was kind of the reason why I was in the company was, it was a relatively spec play. I thought that they could possibly beat those numbers. Everybody was expecting them to not be able to beat those numbers. They ended up not, but I expected that there was a good enough risk-reward premium for me to go into at that point in time and really see what actually happens, because I believe in the company. I love Nintendo. All of my friends are obsessed with their products, and so I was willing to, kind of give them the benefit of the doubt, especially with how nice the balance sheet is. That did not happen, and so I closed that position on January 18th, and so that was an average loss of about 9% from that starting position. Now, since then, and since pretty much December started, I started accumulating a lot more positions, and a lot of that has to do with the fact that the stock market was in such a bear market during that period of time. So I added into Altria, I added into American Eagle. Thankfully, those positions are going well. Added into Fizz, thankfully that's going well. And then I did a lot of buying on Christmas Eve. And now if you looked at Christmas Eve, the stock market tanked dramatically. And in my opinion, it was just something that was like so abnormal. Like, yes, I personally think the stock market is a little bit overvalued, but with how quickly things were coming down on realistically no news, I didn't really think it made sense. And so companies that I still thought were relatively fair value to undervalued to the overall stock market were dropping, 5-10% on a day. I decided to really execute my cash position on that day, and thankfully it really paid off. So between adding into American Eagle, Fizz, National Beverage Corporation, Facebook, MU when it bounced off its book value, I started to buy a little bit of just the S&P index because, in my opinion, every time that the S&P index hits 20% off of its high, I think that's a good time to start incrementing a dollar cost averaging type of situation into the market. Intel, I decided to buy it, add in my position more because it dropped like a rock. Right now, I am thinking about actually closing my Intel position over the next couple of months, and that's largely due to the fact that their CFO is now their CEO. And that's something I didn't really want. I definitely have to really consider that, whether I want to close out that position or not. And then I just bought a couple more shares of Fizz when it tanked even below the previous value that I bought it at. So that's essentially it. Right now, the things I previously bought when the market was tanking, ironically, yes, they're doing better than things that I were buying when the market was more overvalued. But here we are. I'm still probably not going to be executing any more of my capital. If I plan on changing any of my investments, I'm probably going to be selling these shares and then switching it into new investments because I really want to maintain a 30% cash buffer in case we do hit a recession. Because if we hit a recession, last thing I want to do is just have to sit and go long and not sell out of my companies because no one can time the market. So I'm not going to be selling when I'm fearful of it continue to go down. But I do want to buy things when they are continuously going down. So that's why I'm kind of sitting, and I probably will continue to sit on about 30% of our portfolio in cash. Hope you guys got some use out of this. Let me know what you guys are buying. Let me know what you guys are selling down in the comment section down below. And I will catch you guys in the next video. Peace.